Good afternoon, everyone. Thank you so much for joining us today. My name is Heidi Copeland, and I am the Development and Communications Director at GNEC. For those who may be new to GNEC, GNEC is a nonprofit community development financial institution based in Newark, New Jersey. And our mission is basically to support small business owners by providing access to capital, training, and business support services to help you grow and succeed. As GNEC celebrates 20 years of serving entrepreneurs in our community, our goal has always been to support the small business owner as a whole and make sure that they have the tools and resources to grow and succeed as an individual and a business owner. We are proud to partner with Prudential Financial through their Blueprints to Black Wealth initiative to offer this financial growth webinar series. Today's session is webinar number 3 out of the 4. And I'd like to welcome George R. Barnes, President and CEO of George R. Barnes and Associates, who is also a financial planner and worksite education program speaker with the Prudential Insurance Company of America. So I would like to welcome George.
Heidi, thank you very much. Again, my name is George R. Barnes, and today's session is really about giving you a high-level appreciation of things that you need to be concerned about when you are planning for your retirement. And so, as the title says, it's your retirement planning toolkit. What I want you to kind of think of it as is if you had a tool belt, there are certain things that you need to have in your tool belt. Maybe you need to have your Stanley measuring tape, maybe a Stanley hammer, maybe a screwdriver, a pencil. There are certain things that you may always need when you are constructing items. And so these are certain terms and services that every individual will have to contend with in order for them to build, if you will, their financial or their retirement. As Heidi said, I have my own practice. I've been doing it now for 38 years, and I do enjoy what I do. And so hopefully the information that I will share with you today will be helpful. So with that, we're going to get started. And if I click that right, and that's all the disclosure information. And then we're going to move the disclosure and just say, now we're going to prepare for retirement. What does that actually mean? Preparing for that retirement, what that means is when you think about your retirement, that retirement timeline is from 50, basically 73 on. What age would you like to retire? Is it at 59 and a half? Is it at 62? Is it at 70? When you come up with this number for your retirement timeline, that is going to be critical for you to know that certain things need to be in place. Like, and we'll talk about this, when am I taking Social Security? When do I have to take Medicare? When can I wait until 67, which is my full retirement age for Social Security? These are things that you need to be thinking about now. Depending upon your age, you should be thinking about at what age should I be or would I like to retire? And based upon your answer in terms of what age you would like to retire, that is how we then determine how you need to save. The younger you are, and again, we'll talk about this over the course of the time that we have, you can take on more risk. Maybe the older you are, you take on less risk. And so if you're over age 50, you can make more of a contribution if you have a 401k. If you're at 59 and a half, you can start taking a withdrawal from your retirement. At 62, you can actually start taking Social Security if you would like. At 65, you can start taking Medicare and Medicare Part D. If at 66 and 67, you can start taking your full Social Security benefits. And then again, starting in 73 or earlier, depending upon what your age is, you have required minimum distributions. So each of these ages have certain access that you have to retirement benefits. And so it will be important for you that as you are planning and moving towards your retirement, you need to know about what quote unquote age triggers what benefits and what your abilities are. Taking advantage of retirement savings, that you need to, number one, save at least what the plan may match. Now, in some companies, and I know this to be true of several, if they are going to match you 4% at a minimum, you should do 4%, right? So that should be like a non-negotiable for you. The other thing you need to do is saving less than the match leaves you an opportunity to save additional retirement funds behind. You need to make sure that you are at least doing the match. Make it your goal. Now, the other thing too is that you look over the bottom right-hand corner, you'll see that if you want to contribute the max to your 401k, you can put in 24,500. If you are 50 and over, you can put in an additional $7,000 in there. And I think I have that number right. I might be wrong, but you can at least put that in on top of maxing out your 401k. So it's important for you to understand whatever benefits your company has, or if you have the ability, what you're going to offer your employees. So here are some basic investment principles that we're going to go through next. Conduct what we call just a simple analysis or a situation analysis. Just like know who you are. Where are your retirement savings to date? Have an appreciation of what your projected Social Security is going to be. If you have not gone on to ssa.gov, I would encourage you to do that because that allows you to know what your Social Security income will be. And you then can, again, have an appreciation of what you would get if you took it early at 62 or if you waited till your full retirement age. And the last age that you could wait, you could take it at 70. So you need to know those numbers so that you can have an awareness of what Social Security will provide for you. Know what assets you have. And this fourth bullet point, I think, is critical, is know what you are spending. Know what your wants versus your needs are, and know what you are spending each month. That is critical. And so you want to know that now, and you want to have an appreciation of what that will be like going forward. So, for instance, if your work requires that you commute, and so you've got that commuting cost, and let's just say for the sake of conversation, it's $300 a month. So you have $300 a month that you spend for commuting. When you get into your retirement, you may not be spending $300 a month. So that projected future expenses is going to be lower by that $300. So have a knowledge of where money is and where money is expected to be and how you're going to pay for your current lifestyle. And then also just be aware of the benefits that you have in your retirement savings plan. So we talked about ssa.gov. You see that on the bottom here. But what this tells you is that if you choose, depending on when you were born, it lets you know when your full retirement age is. And if you wait till full retirement age, then you can make as much money as you would like and not be taxed on your Social Security. But if you take it early, you will be taxed. You'll still get it, but you'll be taxed on that. And that's something to be aware of, that quote unquote you get taxed twice. And here's the thing. When people think about taking Social Security early, I've had this conversation with clients that I have been working since I'm 17. I'm taking it as soon as possible. Or someone would say, I have no trust that Social Security is actually going to be in place, so I'm going to take my money now. None of those reasonings are wrong. Just know that if you choose to take your Social Security early, there are rules in play that will impact how you pay taxes on that Social Security. Doesn't make it good or bad because this is how you are deciding how you get your benefit. But what you want to be aware of is what are the rules. Don't be in your feelings because you didn't know the rules. The rules are out there. When you log on to ssa.gov, they explain those rules to you. And so that is what I encourage people to do is know the rules so that as you make that decision, you are not going to be caught unaware. Now, we went through the importance of taking your Social Security, and you look in the middle, if you see you could get a 30% haircut if you take it early. And so it's important for you to know, should I wait to my full retirement? Should I wait to take an early retirement? A delayed retirement credits, that's if you wait until you're in 70. It's important for you to understand how your cash flow is going to be impacted just making the decision not to take it early or to waiting to full retirement. So it is incumbent upon every individual that you go on to ssa.gov, read what's there. There's other information there as well that will be helpful to you in terms of what happens if you are married and then divorced, but you never marry again. Well, if you never marry again, that spouse could, and you're taking your benefit, that spouse could take half of your benefit. So if you're going to get $2,000, your spouse, even though you're divorced, they would be eligible for $1,000, right? Not of your money, but because they're married to you, they would get $1,000. Now, as soon as you got remarried, then that to that ex spouse, that would end. But the reality is that if you never get married again, they would get $1,000. So depending upon how amicable or how heated, you have to kind of think through that. But what I'm just saying to you is knowing how to manage your Social Security is going to be an important part of your toolkit, knowing how Social Security works. Medicare Part A and B. Now, Medicare Part A, you don't pay for, right? But Medicare Part B, you do. And again, it would be helpful to you to go on www.medicare.gov because then they will be able to explain how Medicare works, specifically how you pay your bills if you are in the hospital. And there's a period of time that you wait before you pay a bill, and you need to know, again, as I was saying about ssa.gov, you need to know the rules around Medicare Part A and Part B. And so Part B is kind of like, your current coverage now, if you have it. It talks about what your deductible is. It talks about what the doctor's office is going to cost you. It talks about what percentage is going to get paid, what you have to pay. So it works like that. And if you have a Medicare Part B, because it's not as comprehensive, you're going to need to have a supplement. And so learning how to manage Medicare with all of its alphabet soup with it, that is going to be helpful to you. The one thing that I will let you know about, if you forget anything else, everything else that I've shared with you, is that you have to sign up for Medicare at or before age 65. You have to. If you do not, and you go past that date and you say, oh, it's been 6 months and I never talked to Medicare because I've been working, but now I got laid off and I don't have health insurance. Even if you're working, you have to let Medicare know on or before your birth date that you turn 65. Hey, I'm working. I don't need coverage right now. They need to know that. If you do not let Medicare know that, then you will get hit with a surcharge when they go to price out what Medicare is going to be for you. They're going to say, up, this person neglected to let us know at 65. We're going to put a surcharge on top of that, and that will not go away. All right. So, again, I'll say it slowly. Before age 65, reach out to Medicare. Let them know what your health coverage situation is. You have it or you don't, but they need to know, hopefully, before you turn age 65. Don't wait to do it at age 65. Now, for Medicare's Part C and D, for Medicare Part C, that's the Medicare Advantage, because Medicare Part B is not as comprehensive in its coverages, you are going to be offered a supplemental plan, which is called Medicare Advantage, that will help fill in some of the gaps of Part B. So there's a specific time that you can sign up for that, and that's between October 15th and December 7th. So when you first become eligible. And so you need, again, to know Medicare Part B. That is basically, again, you're going back and forth to the doctors, your visit, your x-rays, your blood pressure test. That's Part B. But Part B is not as comprehensive, so you need to have a Part C. The other thing that you need to have is a Part D if you are taking prescription medication. And so that's why I call it alphabet soup, because it literally goes down, from D to E, F, K even, right? So there's a lot of letters for Medicare, but the main letters that you need to be aware of is A is when you're in the hospital. B is your regular, primary care, going back and forth to your doctor. C is your Medicare Advantage, which is takes care of the gaps that Medicare Part B doesn't cover. Part D, that's your prescription plan, right? So that you can make sure that you have the right prescriptions and paying a reasonable cost for it. What I also want you to be aware of is that when they come up with these premiums for these different services, what they do is that they look back at your income for the last 2 years, and they base the price of your Medicare Part B, the Advantage Plus, the Medicare Advantage, and Part D. They look back at your income, and that's how they determine what your premium should be. How will taxes impact your cash flow? Well, it's a lot depending upon where you are, right? Because when you think about taxes, you've heard this phrase before. There are two things that are certain in life: death and taxes. And with taxes, depending upon what the tax brackets are, and I believe I have this, I don't know that I have it exactly right, but I think that right now it goes from 0 to 12% to 22% to 24% to 32%, and I think the last one is 36, but don't quote me on that. So those are the percentages of when you have income coming into your house. What are the taxes? You will never escape taxes. The only way that you escape taxes is that if you put money in what's called a Roth account. That way, and even in that, you're not avoiding it, you're just paying it early, but it's growing without you paying taxes. And then when you take out the distribution, that's when you pay the taxes, right? But other than that, you're paying taxes. You're paying federal and state taxes. Again, that depends on where you live. If you live in Florida, you don't have any state taxes. If you live in Delaware, you don't have any state taxes. But if you're saying New Jersey, New York, Connecticut, you have state taxes. So it's important for you to understand that taxes are going to be a part of your overall life, and you need to keep that in mind. And you need to make sure that as you are living your life, that you are aware what those taxes will be. When we talk about being an informed investor, that goes back to me saying, go on SSA.gov, go on Medicare.gov. Back in the day, when I was a kid growing up in Newark, one of the things that we would say is that if you don't know, you better ask somebody. And I think that that phrase still rings true. If you don't know, you need to ask somebody. If you're unaware of how your Social Security works, you need to ask someone. If you're unaware of how Medicare works, then you need to ask someone. Right? So that could be a financial advisor, that could be the help desk at each of those institutions, but ask, right? There's no such thing as a stupid question when it comes to your retirement. The more you know, the more that you will understand, and the better that you will make decisions. At least that's what my hope is as we work with individuals as well. So when you start to think about your retirement benefits, you can go on, this is the Division of Labor.gov. These are good websites for you to know about retirement benefit plan savings and what you should know about your retirement in general. And so we try to educate. That's a major part of when we do our plans, is that we try to educate clients so they know better how to use the sources that they have or the resources that they have, even if they're just doing an IRA. Well, what's the best way to use that IRA? And we work in conjunction with accountants to make sure that what the accountant is telling the client is also telling us, so that when we provide different services to them, they're educated about how things are supposed to go with their retirement. So I can't speak enough in the years that we've been doing this, and I think I said this at the top of the at the session. I've been doing this now 38 years, and there are so many different kinds of statements that still ring true, because people will get to retirement and they'll say, for the first time I realized I should have saved more. Well, they say stuff like, well, I probably should have been more aggressive. Right? Well, I didn't have an appreciation of how things are going to cost. Wow, I'm no longer going to get a check every 2 weeks once I'm retired. So those are kind of the epiphanies that people have when they talk about their retirement and when they're in it. And so if you can take advantage of these resources now, you'll be that much more aware. And as I said in an email, some of you may or may not know this cartoon, but as a kid, G.I. Joe used to come on. I used to watch it regularly. And there was a tagline with G.I. Joe, and knowing is half the battle. And I would say to you, knowledge is half the battle. Knowledge is power. It gives you control that you are not going to just go on, ease on down the road. And then all of a sudden you realize, oh, there's a cliff. No, you know what to expect and you know how to plan accordingly. Now, that is the end of our session in terms of how we should look at our retirement toolkit. The thing that I want to emphasize, because I've said this multiple times, but now toward the end, I think that retirement planning in particular is the one thing that people unfortunately don't do well. And it's because you're so focused on building your business and making sure that it grows that you fail to see that you need to plan for the older person that you will be. And so don't let that older person look back and dislike the younger person that you are. You need to be aware of this. You need to carve out some time in your day that says, okay, what can I do to better understand what my retirement is? If I don't have enough money to put aside for employees, am I at least putting money in an IRA? Should it be a traditional IRA? Should it be a Roth IRA? Have those discussions with yourself. And even if you can only save $10, then save $10. And I'll end with this story. I'm a big NBA fan. You see me got on my Knicks shirt. I'm hoping that they beat Philly today. But one of the players for the Minnesota Timberwolves, last name Randall, he was raised by a single mom, and she taught him how to be aggressive. She taught him how to be disciplined. She taught him how to have a good work ethic. And he was so in tune with his mother that he would save the money that he got as an allowance. And if he had any side hustles, he would save that for her so that if things got tight, he would have money to give to her. And I thought that that was very commendable that this young man was so in tune with his mom that he saved this money. Now, I can't think that, he was getting a lot of money, but the fact is that he was saving what he had with the goal of being able to help his mother. I am saying to you, do the same thing. Save what you can in order to help yourself. And the way that you do that is have a financial self-awareness, make sure that you have a goal in mind, and that you start to have a plan on how to get to that goal. And again, please know that that GNEC has my contact information. If you are shy and you just want to reach out to me directly, they have all of my information, and that you can reach out to us and we'll do our best to see if we can help you.
Okay, great. We just want to end by saying that this is a part of a series of 4 webinars. We just wrapped up our 3rd one, and we have one more on June 10th. So please feel free to join us. I know those who registered for this event also registered for the next. So please join us for our last session there. If you have any questions or suggestions on topics that you would like to learn about, please feel free to email me. You guys do have my email, since I've been emailing you nonstop around the different programs that we offer. But with that being said, thank you so much for attending, and I hope that today's lesson was extremely valuable. Have a great day.
Thank you. Thank you, Heidi.